Hi, I'm Mash Ponikala. Today, I'm talking about the first month of my day trading. I did over 100 trades in 1 month, that's February 2021. And I wanted to talk about the lessons that I learned from these 100 trades. I also want to talk about setting up a trading account and what are the different options, at least for what I had, and how you can go about setting up, whether day trading can be, whether you can make a living out of day trading, and what are the pitfalls and the pros and cons, and so on and so forth. So in January, so the 1st of January 2021, I started educating myself. Now, I did a video before about what you need to do if you want to get into day trading and what not to do also. And in that, I mentioned that education was the most important thing. You need to educate yourself if you want to go into stock trading, day trading, swing trading, investments, cryptocurrencies, anything to do with the stock market, options, futures. You need to educate yourself first. So I gave myself 1 month to learn and to paper trade. But to be fair, I did have a little bit of knowledge from years ago when I did dabble a little bit in the stock market. And I always had a small portfolio of tech stocks for the long term, the usual Apple, Microsoft, Google, things like that. So for me, the 1 month I felt was enough to get me started on the technical analysis, learning and looking at the market, understanding the market, things like that. And I did a bit of paper trading, and the paper trading went really well. So on February 1st, I decided to switch on to the real live account. Now, I will jump into the platforms and then we can talk about how I went about doing this. First of all, if you want to day trade, that means if you want to do more than, 3 or 5 trades a week, you need to have a day trading account. And most of the bigger platforms like IKBR or any of those TradeStation, Ninja Trading, those platforms have fantastic software. Their spreads are really thin, and spread is the difference between what you're buying the stock at, what you're selling the stock at, and they're fast. Their live data is fantastic, and so on. They've got lots of benefits, but the biggest problem is if you want to have a day trading account with any of those bigger platforms, you need to have a minimum of $25,000 in your account sitting at any given time. So that is not the money you're trading with. It is the money that should be in your account. And whatever you want to trade with would be on top of the 25,000. So if you want to trade with 15,000, you need to be putting about 40,000 into that account. So that is the biggest kind of obstacle in going for those platforms. The other alternatives are things like Robinhood or Etoro, Ameritrade. I chose Etoro because I used it in the past and I sort of like the interface, and it's got lots of cons, but I like the interface. So let's jump into my Etoro account. And so this is my paper trading. As you can see here at the top left-hand corner, virtual, it says. Let's go to the portfolio. Well, something is still running. And as you can see, eToro gives you $100,000 virtual money to play with, right, on the virtual platform. So I took that $100,000, and in January, it ended up $117,000, right? That was fantastic. Right. So this is the virtual account. And when I saw this and I thought, okay, good. I picked up enough, and I read Adam Grimes' The Art of Technical Analysis, The Art and Science of Technical Analysis. I recommend that thoroughly. Fantastic book. And I also sort of got Adam Grimes' website, the free course. Beautiful, beautiful. And then I thought, okay, let's pull the trigger. Let's start real trading. So let's go into my real portfolio. Okay. So as you can see, this is the history of it. I put in $10,000, and at the end, you can see here the close time, 26th February 2021, I withdrew $10,000. There's still about $12 left here. I don't know what that is doing here. I thought I took out everything. But as you can see, in 1 month, it's about, what's that? 11 plus 12, $23, $24, right? Now, one of the things I mentioned in the previous video about whether day trading is a good thing is that I sort of said that you need to have a trading journal, right? You need to maintain a trading journal. And I did maintain a trading journal. This is my trading journal, right? So I've got here the date, the ticker type, and the platform. And I'll tell you why, because eToro, and then I also hooked up with Capital, and I'll tell you why, and all that. Now, let's just look at the main figures first, and then we'll dig into the details. So eToro, I put in $10,000. It's 10,011. Actually, it's more than that. And then in Capital, I put in $5,000. And yeah, it at the end of February. So totally on eToro platform, I made about $24. This doesn't show the $12 at the end. And then on Capital, I lost $200. So all in all, I had 25 winners, 40 losers. These are trades. I did over 103. You can see here, total trades, 103. On eToro, I had 25 winners and 40 losers. That's 5:8 ratio. And on eCapital, I had 13 winners and 22 losers. In terms of total investment, 98,000. Well, okay, so 10,000 is what I put in. But this amount, this 98,000 shows you whenever I put, let's say I put 2,000 into Tesla, right? That adds to that 2,000. Of course, when I close the position, I get the 2,000 back. Plus, if it's a profit or less than 2,000. So this 98,000 is the accumulation of all over the 100 trades or whatever trades I did on eToro. That is the total amount. I made $1,142 on eToro, but I lost $1,118. On Capital, I made $534, but I lost $732. I had 8 green days, 11 red days, right? And these are the fees that they charge. So total at the end of February, I lost $186. For a $15,000 account with 100 trades, I think 186 is not bad. In fact, I was in the plus. I was quite in the plus. But I'll tell you the whole story. Now, one of the things that I learned, right? The first thing I want to say is it's not easy. Day trading is not easy. Swing trading is not easy. Trading in the stock market is not easy. It looks like it's easy. It isn't. The social media, TikTok, YouTube, it's full of people showing you their gains. $2,000, $3,000, $20,000, $30,000, $100,000, $1 million that they made day trading, and they show accounts such as Robinhood or whatever. I wouldn't say that's all lies. Maybe it is. But I would say that my experience and several of my friends, we did this experiment together. And no, it is not easy. And I'll enumerate why. Right. You will lose money. You will definitely lose money. Day trading, you will lose money. Initially, I would say I just did 1 month, 100 trades. But you will definitely lose money. Even 6 months, you will be losing money. You will have more losing days than winning days. You will have more losers than winners. So how did I manage to lose only 186? And you might think, what? You're proud that you only lost 186? Yes, I am proud, because typically $15,000 account with 1 month of training, I should have lost 3,000, maybe more. But the biggest thing that saved me, and that is important in day trading, is risk management. So I had a risk management strategy, 1:2, 2:3. In fact, I even had a calculator. Let me show that to you. So this is the risk management calculator that I had, right? So account size, 10,000, well, it's 15,000, but exposure, 20%, win, loss, 1:3. This could be 1%. I didn't want to lose more than 1% on any given trade, right? And then this works out the stops and the buys. And because of this, if we go back, yes, okay, so the story started the first day. GameStop was like, all over the news, right? It was the craze, right? So this is what I'm talking about. This is the temptation that you have when you're sort of day trading, is that you will go with the trend. You will get fueled by whatever is going on social media, on Twitter, on Reddit. Anyway, I thought GameStop was going superb, and I bought them at 314. So this was already after it went to its high and then fell. What was I thinking, right? But anyway, straight off the bat, I lost $100 because my stop loss was hit. 1% of 10,000 is $100. So my stop losses were set at $100. I jumped in again at 241 and I lost again $100. And then I jumped in again at 148 because I thought, okay, it's now come to the bottom. And then I was looking at the technical analysis, the chart, and it looked like it was going to go up, right? But that is what it is. Look, when you watch technical analysis, right? You watch technical analysis and people are doing videos on technical analysis, and they show you historical figures, and then they show you patterns and what happened. Look, in hindsight, it's very easy, right? You look at, let's see, let's put this as by the way, this is TradingView, beautiful platform. Okay, so let's do this as a day view, right? And let me remove this Fibonacci. Okay, now let's move this. First, somebody analyzing this chart on YouTube or elsewhere might say, okay, look at this. We've got resistance there. So all these days it was resistance, right? And then below, and then it sort of, it was testing resistance. It failed, went down, reached up, and then it crosses the resistance. And when it crosses this resistance becomes support. And look at that, it took off to all-time highs. Yes, it's beautiful when you talk about it. And they'll say, okay, there is a bear flag here. Okay, they're not really good lines. This is just to illustrate, right? So they'll say, okay, when there is a bull flag here, this is called a bull flag, where it's a pullback and it will take off, right? It will take off, definitely, especially in an uptrending market. Yes, when you analyze this and you look at it, you think, wow, this is fantastic, right? But on that day when you're actually trading, right, and you are here, so this is called the right hard edge. And look at this. This is, you don't know the future. You just know this day it crossed. Should you buy? Maybe not, because look, here it crossed, but what happened? It fell, right? So when gurus, when these people are analyzing charts and they're talking about patterns and strategies, they're looking at historical data, and it's easy to talk about historical data and say, yeah, when you see this, just buy here, it's going to go up. And then when you see this, sell here, it's going to go down. By the way, look at this day. Look at this day. What? 23rd February. Oh my God. It went down to 7,500, and this is Bitcoin, right? Anyway, so something like that. So let's say you buy here. You're thinking, okay, this is going to take off. You buy here. What happens? It cuts your stop loss. And for Bitcoin, especially on Etoro, 25% stop loss. You can't just put 1% of your account. So you can't just put $100 as your stop loss. It's $1,250 if you put in $5,000. I'm not kidding. So let's say you put it in on that day, you would have lost $1,250. Okay, so that is what happened the first day, $272 down. And I immediately woke up and I said, okay, hang on, I need discipline. I'm not gonna run with the trend. I'm not gonna look at social media kind of alerts and what people are buying. And the next day I went for JP Morgan. I managed my risk properly. I made very small amount, $13, but it's green. That's important. You need, if you're going to be doing day trading, I would recommend not to. Especially right now, the market looks very volatile. But if you do, then don't look at the amounts, but look at the green or the red. Okay, you don't want to be in the red, even if it's a small amount. It usually will be big amounts, but you don't want to be. Anyway, so JPM Morgan, I bought twice. Not bad, right? Look, I put only $350. So I made a small amount. Then 4th February, Tesla. I sold Tesla because it looked like it was going to go down. And then immediately I recognized that maybe I made a mistake. I put $5 in, I closed the position, $2.52. Then Beyond Burger, right? Beyond Burger made a lot of money on my virtual account. So I thought, okay, I'll continue that. And the trend looked the same. It was going down. And I bought in 500, lost on that. Silver was my biggest mistake. I bought silver. I lost 34. Anyway, 4th February, $63 down. 5th February, Ford, Atos, $24 down. And then it was the weekend, 8th February, Monday. On the weekend, I sat down, I analyzed these trades. I sort of looked at the charts again. I tried to recognize where I made a mistake. And of course, my biggest mistake was that I didn't have discipline. I was impulsive. I was actually closing. I was closing trades early. I was not letting my winners run like this one, silver. I was afraid. So fear played a big part. So on Monday, I bought some Disney, JP Morgan, Bitcoin, Disney again, JP Morgan, Cree, and Bitcoin, right? And Bitcoin came in good. I made $72. It was a $99 green day. I was very happy with myself. And then what happens the next day, 9th February, right? I go back and I think Bitcoin, okay, Bitcoin, I closed it. Now, I closed it because I put in only $680. By the way, look at that, Disney, I put in $2,500. So I was becoming bold. I was increasing my positioning size. Bitcoin, $680, I made $72. And I thought, and when I woke up I closed the position because I thought overnight it might go down. I just wanted to take some profit that day. So I closed the position. But when I got up, it was actually up and the trend seemed to continue. And I thought, okay, I'm missing out, right? Look at this. I bought $3,000 worth. I jumped in. And what happened? I put 1% stop loss. It was only 1%. Sorry, 0.5%, like $50, because I already, I made $72. I didn't want to take a risk. And stop loss cut off. This was the loss, cut off. PG was a loss. Everything. NEO was a loss. It was $116 loss. 10th February, $45 loss. 11th February, $22 loss. 12th February was a good day. Bitcoin again came to my rescue. I made $110. Chewy, fantastic stock. I put in $2,000, made me $43. Chewy again here, another $18, $10. Tesla, I lost 14. It was $172 gain. Fantastic, loved it. 14th February, 15th February, $74. 16th February, $107 I lost. Now, Capital, you see Capital here. Let me log into Capital. This is my Capital platform, and let me look at the reports. and you will see that, yeah, I deposited. Let me just show you the deposits. Anyway, I deposited 5,000. I ended up with 4,815. I lost a little bit there. And the reason I went into two reasons, capital. Number one, if you look at TradingView, which is my analysis software, it's a fantastic software. Broker list, look, Etoro is not on this, right? So I did some paper trading with TradingView too, and I'll connect it and show you. And look at that. Profit is 326, right? And then I wanted to see if I can connect Etoro. I couldn't. There are others. TradeStation and all had $25,000 requirement. Capital.com is like Etoro. It doesn't have a minimum account requirement. You can day trade with whatever amount. So that's why I chose this. And you can place trades within this. But big problems with Capital.com. First of all, I did not know that by default, Capital.com had a 5:1 leverage or 1:5 leverage. It's a very confusing platform, right? It's very confusing when you're placing a trade. And because of that, you will see here, Capital, I was losing money, right? Look at that. I lost straight away. It was X5 times. And I was thinking, what's going on? Quickly it stopped out, and I was a little confused because I only put in, I thought I put in only 1355, but it was leveraged 5 times. Anyway, the other reason I went to Capital was because Etoro is such a shitty platform. There were many days when the market opens and Etoro logs you out, and you cannot log back in. You can check this on Twitter and just say Etoro service down, and you'll find tons of messages, frustrated people, angry people, because if you had open positions overnight and you're not able to log in, God knows what's happening with those trades, right? And you're not in a position to quickly close the position. And I had a trading plan. I had a few stocks that I was ready to invest in that day. I'm ready for the market to open. I can't log in. I was so frustrated. So anyway, I decided to sort of open another account. I opened with Capital. I put in $5,000 there, and I did a few trades. Now, I wanted to use Capital more because I wanted to use TradingView. TradingView is fantastic. You can, let me connect and I'll show you. Okay, I'm connected now. And with Bitcoin, for instance, okay, Bitcoin, Capital.com doesn't do Bitcoin. Let us do Disney. Okay, this is Disney. And look at that. It's very easy to place a trade. Of course, market is closed now, but 10 trade value. The thing with this is the leverage. Here is the leverage, right? I did not notice this initially. In fact, I probably should have, but I did not. It was my fault. And you can put a stop loss here. You can put a take profit, the stop loss maybe, depending on your account, $50. And take profit, you put $50, 1:1. Or you could do 1:2. And then you just buy it and it gets sent to Capital. But it is great when it works great. But Capital also had many days where Capital was freezing up. You could not log in. The connection between TradingView and Capital broke, and they sent out emails apologizing. I had double, there was a double position open, which ended up in loss. I lost $120 because I clicked buy, but actually buy or sell, and it was recorded twice in Capital as 2 different transactions. Same trade, right? And so the loss was twice. And it was quite, so there is a lot of risk in these platforms. There's a lot of risk in day trading. You wouldn't have these problems with TradeStations or, one of those bigger, you would have problems, a different set of problems, but you wouldn't have these log out, and I don't think as frequently as these platforms, right? Anyway, let's go back to the story. So that is capital. And as you can see here, this day, 17th February, fantastic. I had $415 green, even though I was losing 74 here, $177 here. And this was again because of Bitcoin, right? Actually, Bitcoin, $403 that day, it actually went up to $600. And I should have taken profit there. I thought it would grow higher, and then it started coming down. That's when I realized maybe I need to get out. I did get out. This is 17th February. And if you go and look at the Bitcoin chart, 17th February, let's just take a look at it, right? BTC. So 17th Feb, there, that day here, right? Let me zoom in. This was the day, 16th, 17th Feb. The next day I closed the position and it was a red day, and then it started going down. So it was a good thing that I did. Okay, eventually it came back up, but I would have lost all the money there. So yeah, that was the $415. And 18th February I made $200. 19th was $36. These are all, there was good days. 22nd February, $55. I was actually in the green. I made $100 on whips. I made almost $180 on LB. That's brands, MGM. But you know what I did here? MGM. Now this is the thing, greed, right? And I will list all the bad things at the end or what I learned. But this is it. Greed will make you lose money in day trading. So MGM made $84. Actually, that was a take profit. It cut off. So I put the take profit, it cut off immediately. It was like almost instantaneous. It went up so fast. And I became greedy and I thought, oh, hang on. I shouldn't have had a take profit. I shouldn't have set the limit take profit. I should have just left it so that it would have gone up and I would have made more money. I thought, okay, it's still going up. Let me jump in again. So I jumped in and guess what? It went down. I lost $63. So the $84 I made, I lost $63. That is greed. So greed steps in, and you know what? And I over traded. Look at this, 22nd February, over traded, right? And look, great lesson today about over trading. Went from $120 plus to, actually, this is not minus 20. This is minus 60, right? I also learned that you have to be careful with the enter key on TradingView order platform. So when you're here and you're doing stop loss, right? And you want to change this amount, when you're using the backspace, somehow, either accidentally or whatever, I hit the enter key and the order was placed. So this button is linked to the enter key, which is not a good thing. It should not be. It should be only click, right? It should only execute once you click. I don't know why TradingView has this on an enter key. But anyway, that happened and I lost this one, GT here. I lost money. And GT over traded. This is called revenge trading. I was angry at GT because I got in, I lost, and don't do it. Okay, then you have 23rd February, I made 26, then 62, and then 25th February was a bad day. DKS, this is the one. Capital.com glitch cost double order. Instead of losing $100, which was my stop loss, which is 1% of my thing, right? It's the risk management. Instead of losing 100, I lost 200. And not only that, there's slippage. I lost $207. And I complained to Capital.com, never heard from them again. So I would say Capital.com has these glitches. And anyway, I made some money on DJ. I lost on Twitter. Again, stop loss. This was $100. I don't know, it cut off slippage. Good slippage. It cut off. I lost AAL, American Airlines, because I made American Airlines, I made money in the past. Look, on the top, I made, look, on 24th, I made money. Again, greed. So I jumped into American Airlines and I lost on American Airlines altogether 291. And then 26th February, again, look at this. And look, DG, right? These are leveraged positions. Then I made $2,000. I lost $135. I decided to stop trading because it was the end of the month. That was the last day of the month of February, trading day. And yeah, so that is the story so far. So let me talk about the things, just reiterate the things that I learned. First thing, it is not easy, right? It is not easy to day trade. It is not at all easy to day trade. Next, you will lose money. That's for sure. And I actually spent a lot of time babysitting the trades. And that's why actually my losses are actually limited. It could have been more, but also my profits are limited because I was getting out of trades quickly. So you cannot be trigger happy. Yes, in my case, at the moment, it looks like I didn't lose much, but maybe if I set a trade, set the stop loss at 1% of my account and take profit at whatever, 1:2, 1:3, and based on what the chart told me and let it run, maybe I would have made money. I don't know. I will try maybe another time, but yeah, you will be tempted. Your fear will drive you to close your winning trades because you just want to take quick profit. You want to take that $50, $20, whatever. And you will let your losers run sometimes because you're thinking it'll come back up, it'll come back up. That's what happened towards the end of it. In fact, I think I got worse towards the end of the month than when I started because my discipline, I lost my discipline towards the end of the month, right? Because I was over trading and I was obsessed with it. And in fact, when I had Bitcoin running, I got up in the middle of the night to go to the toilet about 2:30 or 3, and I checked my phone. It was minus 270, and I started panicking. Yeah, so this is not for everyone. I would not recommend this. Now, technical analysis is 90% hindsight. As I showed you before, when somebody analyzes a chart on YouTube and they're like, this is my strategy. It looks great when you're looking at historical kind of data, but on the day, in that moment, it's the right hard edge. You don't know the future, and you make a decision. It doesn't always play out as it would appear afterwards, because once it happens, the next day you look at it and you can talk about it and say, oh yeah, I knew it was going to go up, right? So I'm not saying that you shouldn't believe people online, their strategies, and buy their trading courses and all that, but I would say, be careful, right? Just be careful, do your own due diligence. Next, it's almost like gambling. Yes, it is like gambling because technical analysis, you might learn about a few patterns, you might learn about a few strategies, and you might read a book or whatever. But when you're actually analyzing a chart, in that moment, you don't know. And technical analysis, and this is like almost like gambling, because you think, yeah, I think it's going to go up, or someone says it's going to go up, and the trend seems to go up. Everybody's saying it's going to go up, and then you put your money in, and yes, it can go up. It can also go down. What does that make it? Gambling. Yes, it's just like walking into a casino. Maybe a little bit, you feel like you're doing a lot of work, trying to work out the edge, as it's called, right? Because the market is random. The market is random all the time, like with anything else. And when the market is random, you try to find an edge that maybe, and if you use the kind of risk management, then you might succeed. And what I thought was, if I did 10 trades, right? And if I had a risk management of 1:3, if I did 10 trades, I now lost 7 trades and I won 3 trades, then I will still be profitable. Because if I lost 7 trades, it's 1%, right? Of my account, which will be $700. So I would lose. So 7 trades I lost, 100 each, $700. 3 trades if I win, and if the profit was 3 times, so $300. That 3 threes, $900. So at the end of the day, I would still be $200. But it is not that simple. It doesn't work like that. Losing, yes, you would lose $100. Making $300, no. I mean, I made, I think once, one trade out of 100 made $400, $500, $600. That's it. I don't know why. It falls really fast, but it goes up really slow. Sometimes it doesn't even go up. It's going up and down. So it is gambling. Okay. You cannot make a living with day trading if you have a small account. If you have $10,000, $5,000, even $10,000, $15,000, you saw what happened, right? Check out the figures. Well, yeah, first month, maybe in 6 months' time, maybe I can get better. But what is the opportunity cost? For day trading, you have to spend a number of hours before the market opens, all the time during the market is open, and then after the market is open. You're spending so much time. If you invest that time elsewhere, what could happen, right? You could do something else to make money. So yeah, there might be profitable traders out there, but those are big players. It's the institutional players, hedge funds. Those are the ones making money. And that's why, if you think about it, on YouTube, you find lots of people, videos, right? Selling courses on how to trade. They have the recipe. They have the strategy to make money. If they have a strategy to make consistently a lot of money, as they claim, 20, 30, 30, 40, 50, 100,000, why are they selling those secrets? Why are they selling those strategies, right? Why are they selling these courses? And why are they spending a lot of time on making videos talking about their trading and trying to monetize the videos rather than making the money? If they were making so much money, why would they need this little bit of income, the revenue that a YouTube video would generate, right? So, guys, think about it. It's quite a kind of manipulative kind of market situation, and I would say caution, right? Okay, yeah, the ones making the money are the big bucks there, and the platforms. If you're trying to day trade on something like Etoro or Capital.com, you will lose money because of the spread. Especially Etoro is terrible. So that's all for today. I hope you enjoyed this video. These are the lessons that I learned, and this was what went through my mind. My honest kind of review of day trading, my first 100 trades, my first month of day trading. And yeah, so if you have any questions, just leave them below. If you're thinking of day trading, just ask me questions. I'm not a financial consultant. I'm not a financial advisor. And whatever I say in this video is purely my personal experience with my trading account, with my money. I'm not advising you to either invest in the stock market or not invest in the stock market, right? It is up to you. I bear no liability for the decisions you make, because at the end of the day, you will lose money. You will lose money in trading, at least beginning. In fact, a lot of people lose money throughout their career. So yeah, that's it for this video. And maybe I'll try and do other videos around this topic to help you more. But for today, this is it. Take care and see you next time.